Hi guys, this is Gettess with the Market Sense for the week of November 22nd, 2011. As always, charts come from my Trade Navigator software, which is provided by Gettess Financial Technologies. We're going to do something a little different here. The markets are very volatile, thin, and therefore kind of dangerous in this holiday week. So I thought I'd give a little longer term perspective here. I'm not a long term trader, but I do look at things like this to give me a big picture of how the market is behaving. And we want to look at stocks here first. So I want to show you they've had this really nice rally up since March of '09, of course. And there's a lot of people who say this is still a bull market. I think the way they've broken down and stalled around here, it's hard to tell. What are they doing? Well, if we look down here at our momentum indicator, you can see that the RSI has swung back up and has not been able to reach its moving average and appears to be turning back down again. Now, if you look back here into 2007, 2008, you'll see a somewhat similar circumstances here in late '07 and here in earlier '08. And as you can see, the market turned down pretty hard off of those two situations. And I don't really expect it to be quite that excessive here, but I think you have the same situation. I think the momentum appears to be lessening substantially here, not even enough to get above the moving average. I think we can probably look to see another leg down here. This old low here around 975 in 2010 would be an obvious target, and it matches the Keltner band, so it could be somewhere in that vicinity. But it could be lower too. They could just basically do another leg down that matches this leg down. Anyway, just a bigger picture perspective says that the outlook in stocks is not terribly good, and I just wanted to show you why. If we look at bonds, on the other hand, they look quite the opposite. The momentum is staying strong in our indicator down here, and price pattern wise, they blow out to new highs. They're showing no signs of rolling over. They could be going sideways, and we've had an inside month, and looks like we might get another one, and this could shrink into a sideways pattern that eventually would roll over. That this going up and going like this is kind of like distribution, so they could roll over out of this pattern. They just aren't showing any signs of doing so yet, so it's hard to get very negative about bonds at this point. Not stupid to look for reasons to sell it, but you got to be cautious because at this point everything still looks pretty good here. So just wanted to give you a little bigger picture perspective because the stuff I use works on intraday charts all the way up to as long term as you want to go. That's what we're looking at today. Hope everybody has a great Thanksgiving and watches a lot of football and just stuffs yourself full. Thanks for checking in with us, and hopefully we'll be back to normal next week.